For The Street in New York, I'm Jill Malandrino along with Jack Mohr, and together we bring you the trading week ahead. Jack, let's take a look at the 5-day on the S&P because Monday through Thursday, the internals really were pretty weak. We got the bounce on Friday because of the jobs data with the thinking interest rates are going to go farther out.
Right, and I think that it was an important jobs data because last month was terrible and it was really disappointing, and I think a lot of people were wondering, okay, is this a sustained trend or is this something that is going to tick back up? So the jobs report came in a lot better than I expected, even though it was right in line with expectations or even slightly below. But I think that the market is still struggling with understanding that it is a very high multiple market, and I think there are a lot of areas like retail that finally caught up a little bit this week, but we started realizing that not every stock is defensible, even if it's a good stock, and there still is room for, I think, valuations to come down in some of the sectors. Certainly biotech is, I mean, valuations, you almost have to throw them out the door there, but I guess the way I'm thinking about it is that I feel pretty, I still feel pretty good about with oil going up. I think that retail still seems pretty defensible if you pick the right names that do have a growth story, like White Wave this week was a great one. Even amidst a very struggling consumer packaged good food environment, you have companies like that there's scarcity value in those growth stories. So ones like that are the ones I'm trying to focus on.
Well, it's really interesting because if we take a look at the trading week ahead, we're going to get even bigger look into retail, as the majority of the stocks are going to be the retail big boys that are reporting. In addition, we're also going to get the restaurant stocks that have been wildly popular. In fact, I just met with Bojangles this afternoon as they IPO'd, but you have Jack in the Box, El Pollo Loco, and there's these trading names that are out there that are going to be really exciting to watch. Of course, we're going to have retail sales on Wednesday, and there's also a slew of manufacturing data we want to pay attention to. And of course, as has been the theme for 2015, is the commodity space, foreign currency, and the impact of the US dollar. But I want to take a look at Cisco, which is a stock that you and Jim own in the Action Alerts Plus portfolio. We'll take a look at the one-year chart.
And with Cisco, I guess it's one of our favorite names. I think it's so underrated for two areas of exposure it has that are incredibly lucrative in this day and age in tech, and that's cloud and security. And they actually leverage both platforms to be very virtuous with cloud security platforms as well. And some people were saying, oh, maybe they should buy Salesforce and expand that. Well, they don't need that. Their enterprise cloud business is growing over 100%. Bookings are up over 100%. And I think that will continue to grow. And a lot of people are obviously worried with Chambers now leaving that it's going to be a different story. But I think that the great thing is that Chambers left it with his successor with an incredible story to run with. He's really set up a framework for a company that can win over the next 5 to 10 years. And one little just aside for me is that if he's announcing that he's leaving before the quarter, I feel pretty good about the quarter that he's not going to announce that he's leaving and then have a bad quarter to leave off of.
Well, it really reminds me a lot of Apple when Steve Jobs was sick. And who would have thought, everyone was upset that if he dies, it's going to change the course of the company. Do you think a company like that is not going to have a succession plan in place? Right. They bring Tim Cook on board, and revenues have been the highest that they've ever been. So with companies, especially legacy ones like that, it's Cisco. I don't think that's really an issue, especially with John Chambers staying on as chairman. But let's take a look at the commodity space. So let's take a look at the 5-day on crude. And as you can see, that there was the failure at the 62 half level. And that was really key over there because now we're back below 60. And traders really had that as an important point on the charts. And I think, fundamentals really have not changed here. You still have the oil supply glut. And that's what's going to be really key, especially when we look at retail numbers next week, because I don't think the gasoline story really is in play as much as it has been. And you saw that this week with the retail names that you own. Even though it's moved up a bit, it really hasn't impacted the stocks.
Right, and I think one thing interesting about crude, I was taking a look at it over the past few days, and I think that we forget, so we're all talking about OPEC and we're talking about the shale production, and I think what we're forgetting is that 60% of the market is coming from countries outside of that sphere, and that production growth is going to come down tremendously. So I think there still is long-term, I still feel pretty confident that there is another 10, 15 bucks of upside for crude. And so I think it's something to sometimes look past just what the headlines are and start understanding that it is a huge market beyond OPEC, beyond the US, and those countries are simply having to cut production at a pretty high rate.
And we'll wrap it up with gold. We'll take a look at the 5-day. And as you can see, again, everything is trading around that key $1,200 level. And that's really not going to break. That's going to be the pattern until we get some sort of decision with an interest rate hike. And again, at the end of the day, a lot of traders I speak with want this hike to happen. It's only 25 bips, so we can move on from there. But gold, along with the rest of the commodity space, is really going to jockey around what's happening with the US dollar. And that's something that you have to pay attention to as a portfolio manager, because that's going to impact what happens with your stocks as well.
Yep.
All right.
Looking forward to that rate hike.
Thanks very much, Jack. For the trading week ahead, I'm Jill Malandrino.